What's up guys, welcome back to InvestingPH. So 2024 has come to an end. Last year, a lot of things happened, and the only bright side of it was most of my goals were achieved, like achieving more than 12k monthly income. Well, I actually didn't think I'd go way past that. Also, I managed to surpass my monthly savings goals as well. The only part that I wasn't able to achieve was my YouTube goals. Well, as I said, a lot happened last year, so hopefully I get back on track with my channel. But I'm thankful for the fact that 90% of my goals were achieved. You see, I always do this whenever the year starts. I lay out my yearly goals so that I have a direction as to where to go. And also my short-term goals as well will eventually lead me to my long-term goals, like reaching financial freedom, retiring early, and just to be a better me. It is so important to have these short-term goals. If you're only focusing on the long-term ones that take such a long time to achieve, well, you will lose steam and you will lose momentum and motivation to continue forward. With these short-term goals, it gives you a mental boost whenever you achieve it, which is important for you to continue moving forward. So break down your long-term goals. That's why my assignment right now is to lay a blueprint of what I want to achieve this year. Goals that are aligned with my long-term ones. So for you that does not know where to start, this is a good place to begin. Now, 2024 has given me a lot of opportunities to invest in good dividend-paying companies. I said in the first quarter last year that this is the nature of our market. It will rise mid-year, then fall back down again at the end, which is exactly what happened. Our index rose to more than 7,500. Though the bull market lasted longer compared to previous years, we again ended up below 6,700. This is what I love about my strategy, dividend value investing. I just invest consistently in the stocks on my watch list that are still undervalued. I don't care what the entire market is doing. If it's a bull run, then the same principles apply to invest in cheap companies. If the bears are winning, the same thing, invest in cheap companies, which for a bear market is more abundant. It's so easy to find a good bargain when the bears are winning. With this strategy, I prevent myself from being swayed by emotions like, oh, the market is rising, or this stock is rising, I need to get in, then ending up buying a company at a very high price and the market goes down. No, I do not get swayed by those things. If it goes past my buy price, I stop and move on to the next stock. I can see the difference. Back then when the index was below 6,500, my returns were only 10%, even below 6%. Now since I'm just focusing on investing in undervalued companies, regardless the market is up or down, even though the market is below 6,700 right now, my returns are up 28.94%, and this is also because of all the dividends I've reinvested in undervalued companies. The best thing about it, since I got it at a bargain, it will give me more dividends the next time. So it's a win-win situation for me. If the market is up, my returns go up. If the market goes down, yes, returns go down as well, but I get good bargains for companies that will give me higher dividends. Another factor is, since these are strong companies, I can sleep well at night knowing they have a high chance of growth year after year. That's why I always remind my viewers, don't just blindly invest in stocks just because a certain company is popular. Remember, even though it's a strong company, it's not always a good investment as you may be buying it at a very high price. You know, I have a story. When my friend asked me how to invest in stocks, well, I thought for a moment about how I could explain it in a simple, short way, and this is what I replied. The simple way you can do it is, if you want to start, look at the graph of the yearly earnings of the company. Most websites already show a graph. This way it would easily be understood by everyone. The graph has to be consistently growing. Second, look at the equity. Is it also growing? This way you have a clue if the company is managing its debts well. Third, look at price ratios, the PE and the PB, compared to its peers. Lastly, compute your buy price, which is the most complicated. That's it. For me, those are the basics. At least you have a clue about the state of that company. If you already know how to compute the intrinsic value, then it would only take you 10 minutes to do this. Then if you want to learn more, study the quarterly and annual reports of the company. Little by little, when you research it, you get to know more, and at the end of it, you'd be able to decide if this company fits your criteria. And my second answer to my friend, sign up to Dragonfly, which is a broker I use, and you would have access to buy below price of all the companies in my portfolio, as well as the portfolio of Dragonfly team and other finance creators like Kuya John and Tita Glow of Money Wise Engineer. So this is a good guide as well if you haven't yet studied how to compute the intrinsic value of a company. If you want to sign up to Dragonfly, use my link below and you can get up to 1,500 depending on your initial funding. But again, I would just want to remind you that it is very important to do your research first, even with all this. There are also other platforms like what I use, which is simply Wall Street, that have computation as well, and they already summarize everything for you. They have their earnings, debts, price valuations, and notifies you as well when insiders are buying or selling the company. I tell you, the way they present their data is so easy to understand. They also have a portfolio tracker that lets you assess the health of your portfolio. So if you want to sign up, they offer a forever free basic plan, and if you want to avail of their paid plan, which gives you unlimited access to all the tools, then use my referral code to get up to 50% discount. So there are a lot of tools nowadays that will help or guide you to make good investing decisions in the stock market. Back then when I was starting, I didn't have all these tools. I did it all manually, which took me a long time to learn about companies. So that was quite a long intro to my portfolio update. Anyway, my portfolio is now worth 3,647,896 from my invested money of 2,829,083, which gives me a 28.94% return or 818,813 pesos, at which 438,431 pesos comes from dividends. This is while the PSCI returns are negative 19% from the day I started investing, but if we look at FM ETF, it has a return of negative 11.97%. This is way lower because FM ETF accounts for dividends reinvested. As for my dividends, the total year-end dividends I got was 182,342 or 15,195 pesos a month. I got 20,102 in November and 20,896 in December. Imagine I started my channel back in 2021 wherein my year-end dividends were 43,081. Now I'm earning 15,195 pesos a month, which is just outstanding. I'm estimating if I just continue what I'm doing, my 2025 dividends estimate would be around 18,000 to 20,000 a month. This is far off from what I estimated back then, where my goal by 2025 is to get 10k dividends a month. This is because the market gave me a chance to invest in a lot of good dividend companies at a cheap price. For the stocks I bought, I focused on just 3 stocks for the past 2 months, namely the newly added PLDT, RCR, and FGen. Now why did I buy PLDT? This company is lacking at some points. Like yes, revenue has grown throughout the years, but their net earnings have stayed stagnant for quite some time, as well as their equity. This is due to their increasing debts. But one thing to take note of in this industry, telco companies usually have higher debts compared to other industries. Like Globe has significant debt as well, but the brighter side for them, they are still managing to increase their equity year by year. Unlike Tel, valuations of Tel compared to its peers, it is the most undervalued based on price to earnings, but for the price to book, as their equity is affected by large debts, it's higher compared to its rival Globe. For dividends, they're consistent with it and have actually grown quite a bit in the past years. So the big question here is, why did I buy it, considering the financials are way far from its rival Globe? Well, number 1, PLDT's brand is huge in our country. Globe and PLDT dominates, and as its price right now has dropped significantly, even with the risk involved, the pros beat it. Dividends are high at 7.3%, and I don't think Tel would be going anywhere in the years to come, and there's still room for substantial growth in its business. And since I'll only be buying below my buy price with a margin of safety in place, and of course I'll only be putting as well the amount of money I'm comfortable putting in it, I'm good with the risk involved in the company. And again, the brand itself has a good mood. It's been a long time since I've been thinking of adding this to my portfolio, and I'm just waiting for the price to drop below my buy price, which is set at 1,397 pesos. So this is a good addition to my dividend portfolio. As for the 2 stocks I bought, RCR and FGen's price has dropped as well, so I continue to invest in it. In my previous portfolio update, I discussed that I want to add more to the power industry, and also with the addition of Tel, this diversifies my portfolio even more. As I've been saying a lot of times, I'm a firm believer in proper diversification, meaning I buy different companies in different industries that are strong, give me consistent dividends, and are trading at a fair price. That is how I diversify my portfolio. So for 2025, my strategy is the same, investing in strong dividend companies that are trading below its fair value and I would just keep on doing that no matter what the state of the market is. I won't chase after a stock. I want to buy it at my terms. If it goes beyond my buy price, then I move on to the next undervalued stock. It's that simple. Don't overcomplicate your investing strategy. Investing is boring, so live with it. You don't need to be very active to succeed in investing. That's why there's nothing new to what I'm saying in every video I'm making. This is it. Investing is boring. Almost all the time, it's a boring strategy that works here. So to finish this video, be consistent with your strategy and create your 2025 goals that are in line with your long-term goals. This way, you won't stray from the path. With that said, I hope you found this video helpful, and if it did and still haven't clicked the like button, then be sure to do so before leaving. Thank you and see you in the next video.